What is going on, guys? We're back again with another video, and in today's video I'm going to be going over the best ICT trading strategy. If you want simplicity and an obvious and easy approach to price delivery, you came to the right place. This is going to be on a trade that I took today on gold, and it is utilizing my forever model, and you will see it exactly how I use it and my checklist in this trade and this video. So let's get right into it. So like all my videos, I always start off with a blank chart. Now I have gold on the weekly and silver on the weekly on the right. And before I show my annotations, I want you guys to pause the video, mark up your charts, and compare what I have on the next slide. So do that now. So if you got the annotations marked up properly, step one of the checklist for my forever model is looking for an internal range liquidity pool tag. And step two is looking for SMT divergence inside of that internal range liquidity pool. But you could see here, we do not have step two on the list. And that is okay because gold has been in bullish order flow for weeks now and even months. So what I'm anticipating, even though we don't have SMT divergence inside of this weekly internal range liquidity pool, I'm going to still utilize a higher time frame and look at the lower time frame, which is the daily, to see if there's anything that I could frame based off of that weekly tag. We have a drop into discount on silver on the weekly, and we have a fail to drop on silver, a fail to drop on gold. So even though there's no SMT inside of this weekly bullish fair value gap, there could be something that we can identify on the daily. So let's watch that now. So looking at the daily chart, blank, pause the video, mark up your annotations before I show mine on the next slide. And what do we have? We have a tag of a daily bullish fair value gap in discount of the daily dealing range. And step two, SMT divergence with silver inside of that daily bullish fair value gap. We have a corresponding low in this candle matching with this candle here. Higher low, lower low. Low, higher low. But if you also look closer, we have lower lows on the daily here and higher lows on silver here. So we're already having the market tip its hand to us that at the discounted tag from the previous week, we were ready to reverse. And all we're doing now after this expansion from the market giving us the idea that we're going to continue on bullish order flow, last week was our confirmation. Now this week we want to play the continuation. And you can see here, price expanded. And on Monday, small range day because it was a bank holiday, and Tuesday, we traded into a daily bullish fair value gap, creating SMT divergence with silver. With this candle corresponding to this candle, you could see a low, higher low, a low, lower low, inside of an internal range liquidity pool. But let's look at this daily a little bit closer. We already confirmed that gold was stronger than silver, with gold making its higher lows and silver making its lower lows. So I already know that I want to trade gold over silver. But if we look at this at a more technical standpoint and a deeper level, what did we do here? We had an accumulation on the daily in premium of the daily dealing range. And we had this specific candle right here sweep the short-term lows. And then following that, it sweeps the short-term lows into a higher time frame key level that created SMT divergence. Then price expanded higher. So what is this labeled as? Accumulation, manipulation, distribution. We have a range. We have a retracement into the range, into a higher time frame key level, creating SMT divergence. Now we had our retracement. We're looking to have our expansion and continue in our bullish order flow to our external range target. This high is a daily external range and a weekly external range liquidity pool. So the weekly and the daily are aligning itself. So we're framing a high probability bullish bias Therefore, we're only going to be looking for longs. There's no reason to be looking for shorts when higher time frame is bullish and we have our weekly and our daily giving us confirmation that price wants to go higher. So this down close candle, we closed above it on Friday. This was a confirmation of a daily change in state of delivery and a daily bullish order block. But what did we also do? We closed off this daily bearish fair value gap. So we have a daily inversion gap, we have a daily bullish fair value gap, and we have a daily bullish order block with SMT divergence inside of a daily internal range liquidity pool. We have so much confluence for bullish price action, it is almost impossible to frame shorts based off of these market conditions. So, since we had a weekly and we have a daily, I utilized the 4 hour and the 1 hour to align myself and see what I could put myself risk on live in the markets. So let's look at the 4 hour first before we look at the 1 hour. Jump scare, huh? Just really quick, for the people that are new here, I have a free Discord that I want to let you know. I give out top watches of what I'm looking at every single start of the trading week. This was on my top watch last week and this week too. I gave the steps, I gave the analysis, the draw on liquidity, and a lot of the Discord members were able to capitalize on this exact move. And they did this all for free. And if you want to join my free trading community, just go to the link in the description of this video and you will be able to access this and see all the trades and the pairs that I'm looking to execute in that given week. But if you also want to trade with me live and watch me analyze and look at all my executions and signals, click the same link in the bio and that will direct you to the same spot. But let's continue on with the video. Thank you guys. Doesn't this look familiar to what the daily looked like? This is that daily bullish fair value gap with SMT divergence inside of it. What does this look like here? Doesn't this look like an accumulation? And what is this candle doing right here? Wouldn't this be a manipulation into that higher time frame key level? So if this is the manipulation into a higher time frame key level that creates SMT divergence, what will we be looking for next? We're looking for price to close above that exact candle that tagged our higher time frame key level and created our SMT divergence. This is our 4 hour bullish order block / change in state of delivery. So all we would do next, if we're utilizing the 4 hour, execute long when price comes and tags that 4 hour down close candle. And look at what we had today. The next 4 hour candle comes in, tags that OB. The next 4 hour candle bolts, takes out this resting high here. Absolutely stellar price action. Now, since we had the 4 hour explained, let's look and see how it reacted on the 1 hour. At that same time, when we had the start of the New York session, this was after the 2 to 6 a.m. 4 hour candle printed. Starting at 7 a.m. for New York AM, we had that tag of that daily internal range liquidity pool. And then we had a tag of a 1 hour bullish breaker block that also tags that 4 hour bullish order block / change in state of delivery. So if we only wanted to use the daily to the 1 hour, we could have done that and bought the tag of this bullish breaker block or any of these down close candles that also swept short-term lows, because price swept short-term lows on this hourly candle, and look for a tag to long to this external range high. And you could see what happens next. We hold that breaker block, we hold that 4 hour bullish order block, and run to our external range targets with ease. And as you can see here, I called this out to the T in my Discord. This is my execution off of that 4 hour bullish order block and that hourly bullish breaker block. 906 said, I want price higher here on that down close candle that closed above it, came back, tagged it, created SMT divergence, and price ran higher. Such a simple and easy approach to price delivery and refining your bias and putting yourself in high probability trading conditions. This setup and this delivery happens on a daily basis, a weekly basis, monthly basis, doesn't matter. This is how you frame a high probability draw on liquidity, high probability bias, and put yourself in A plus trading conditions. Now, if you combine this with my past 3 videos, you will literally be set for life in regards to a trading setup. Now, I hope you guys learned something from this video, took value from it. And if you did, let me know in the comments below. Give me any suggestions for future videos. But like always, be safe, good luck, good trading, and I will catch you guys next week in the next upload.